The following is a technical analysis on natural gas futures here off the monthly interval, where I have a special shout out to my subscriber trader for sharing this trade idea, as I believe we're currently trading near a critical inflection point. Natural gas being a huge, massive byproduct of crude oil. Throughout this entire year, the primary power markets within the US have increasingly turned to natural gas to maintain equilibrium within the entire grid system. The rise within gas-fueled electricity generation underscores the undeniable significance of fossil fuels, particularly here in natural gas, as the predominant energy source for power generation. This importance is particularly evident within the face of challenges such as intense air conditioning demand during a lot of the heat waves that have just scorched the whole side of the continent, diminishing wind speeds, and the decreased hydropower output caused by additional drought conditions. And deep diving into the much larger picture here within the monthly interval is a significant multi-generational price support. Call it the 253 price support, and this dates back going back to the early 90s here, with a ton of reactionary highs, cuts through a ton of wicks, all the way coming into the new millennium of the 2000 era, additional reactionary low right off the 2008 financial collapse, and additionally some other key additional reactionary lows and highs to help strengthen the validity of how powerful this key inflection point truly is here. And I believe that is a very monumental price support level where additionally within this year, we've been reacting amongst this key level with reactionary lows and highs really throughout the entire year there. Whereas you have the moving average convergence diving right below the zero line thresholds in a very underscore of this huge divergence between the 12, 26, and 9, which could potentially set up a very additional monster bullish crossover there when you have a huge distortion and a massive gap in between the two. The oscillator is just plunging below their zero line thresholds as well, where short sellers will be looking pretty closely monitoring potential flagging action. Just that first leg down here where we had that first initial flag pull, big drop here, just a massive crash in between the two that could set up and spell for a very an additional much larger wave of selling if and when we go on to retest some of these key inflection points. Again, the 211 price support down below, 195. These are generational price support, resistance and support levels that have a ton of reaction right across the board there. And again, just multi-generational price support between the buyer and seller data all across the board there. Zooming in to the daily natural gas and G futures, and I believe we are at a significant turning point where I have added tan coded colors correlated with the monthly interval, the 253 price support, and additionally the 211 price support there, the big levels correlated with the monthly there. But what I see here is a concealed primary reactionary channel with both reactionary highs and reactionary lows to strengthen the construction of this primary channel. And that is a very significant price support with additional reactionary lows really across the entire sphere there. And again, just a very monumental, nice continuation of this uptrend where bull traders, long traders really love this divergent low that got put into place with a nice key technical posture with bullish and positive divergences really constructed there on all three technical momentum indicators. And that was the catalyst, technically induced catalyst for a much larger prolonged uptrend where we made a vast expansion on a series of higher highs and higher lows. And that has been just a continuation space for anyone who caught that right before the summer there with a huge increase in price of natural gas there. Bull traders, long traders, they want to defend this primary reactionary channel really at all cost to maintain this uptrend. We have the 236 retracement, call it the 246 price support, hovering down below the bottom of that channel. And I believe that to be a very significant turning point, very monumental price support action. Whereas short sellers, bear traders, they want to see a solid daily candle close below that dual price support level, and then additionally a bigger wave of selling down to the 211 monthly price support there. Bull traders, long traders, they need to defend this key inflection point really at all costs to go on to re-challenge on a complete recovery of its 50-day moving average and a re-challenging of the 382 Fibs retracement, call it 2787 price resistance, and additionally right back up to that primary top of the channel with the 50% Fibs retracement at the 304 price support. We'll see what happens. I'll keep you updated if I see any more significance here in the charts with the 200-day moving average synchronized with that 50% Fibs retracement. Call it a dual line of price support with additional resistance up to that top of that primary channel.